Money, power, control. These words have defined empires, toppled nations, and shaped civilizations. But behind every coin ever minted, every transaction ever made, lies an invisible network, a system that quietly rewired human society long before paper, coins, or credit cards existed. In this investigation, we uncover the true secret origins of modern banking, a story that doesn't begin with skyscrapers or vaults, but with clay tablets, temples, and debt. A story of how the guardians of faith became the architects of finance, and how every promise written thousands of years ago still echoes in the world economy today. Long before Wall Street or London, the first bankers lived in the shadow of ziggurats. In ancient Mesopotamia, around 3000 BCE, there were no coins, no printed money, just clay, grain, and trust. Temples were not just places of worship, they were the first financial institutions. Priests recorded transactions on clay tablets, storing grain, silver, and goods on behalf of merchants and farmers. These temples became proto-banks, secure, trusted, and powerful. Every tablet carried a story. One might record a farmer borrowing barley for the season, promising to repay it after the harvest. Another would detail the transfer of silver between distant traders. In these simple exchanges lay the foundation of contracts, credit, and debt. But there was a darker side. When crops failed or trade faltered, debtors couldn't repay what they owed. And so began a system that would haunt humanity for millennia: debt slavery. Men and women, unable to settle their debts, were forced into servitude. Debt became not just a financial burden, but a chain around human freedom. It was the earliest form of collateral, and it revealed a brutal truth. From the very beginning, banking was about control as much as it was about commerce. The temples that once served the gods became guardians of wealth, the first to understand that power comes not from gold, but from obligation. Centuries later, the Romans would take those early principles and turn them into a sophisticated financial machine. Rome was more than an empire of soldiers and roads. It was an empire of accountants, contracts, and interest rates. In bustling markets, Argentari and Mensari operated as the world's first private bankers. The Argentari exchanged foreign currencies, facilitated loans, and recorded transactions on wax tablets. The Mensari, appointed by the state, acted as public bankers, managing credit crises and stabilizing the flow of money during times of war. Rome's financial system was remarkably advanced. Merchants could deposit funds, receive loans, and transfer money across long distances through written orders. It was banking before paper, finance powered by trust, record-keeping, and imperial law. The Romans also perfected the concept of interest, the price of borrowing time. Loans to traders, farmers, and even politicians were common, and contracts ensured repayment with precision. To enforce this, Rome built one of the earliest systems of legal accountability. Defaulting on a loan could lead to imprisonment or the confiscation of property. These Roman principles would outlive the empire itself. Their legal frameworks, written in Latin, became the backbone of Western contract law and debt enforcement that persists even in today's global financial codes. The Roman world taught civilization that money was not just metal, it was a promise backed by law. When Rome fell, chaos reigned, trade routes collapsed, and coinage became scarce. But in the shadows of the Middle Ages, a new power emerged, the merchant class, and with them, the rebirth of banking. In the Italian city-states of Venice, Florence, and Genoa, commerce blossomed once again. Merchants, unable to safely carry gold across dangerous routes, began using written promises called bills of exchange. These slips of paper allowed traders to move wealth across continents without moving physical money. This was revolutionary. For the first time, wealth could travel faster than ships, safer than caravans. Behind this revolution stood the early banking families, the Medici, the Barberini, the Peruzzi. These families weren't just counting coins. They were funding kingdoms, influencing popes, and reshaping Europe's destiny. The Medicis in particular mastered the art of banking as politics. They financed wars, controlled currency flows, and even placed family members in the Vatican. Their network of branches across Europe created the first truly international banking system. And beneath it all was an innovation that silently transformed the world. Double-entry bookkeeping. Every transaction recorded as both a credit and a debit. Every liability balanced by an asset. This system didn't just improve accounting, it created transparency, trust, and the very language of finance still used today. By the 15th century, Florence's bankers were wealthier than monarchs. Money had transcended metal once again. It had become information. The story then shifts to London in the 1600s. Here, the next chapter of modern banking began, not in government halls, but in small workshops of goldsmiths. People stored their gold with these goldsmiths for safekeeping and received paper receipts in return. Over time, these receipts became widely accepted as a form of payment. After all, it was easier to exchange a note than carry heavy coins. But soon the goldsmiths made a discovery, a dangerous one. They realized that not everyone came to claim their gold at the same time. So, they began issuing more receipts than the gold they held. Each receipt represented a promise, not a reality. Money was no longer limited by metal. It could be created by ink, by confidence, by belief. This innovation, fractional reserve banking, became the cornerstone of modern finance. And when these private systems grew too powerful, governments stepped in. In 1694, the Bank of England was established, the first central bank in the modern sense. It acted as a stabilizer, lender, and controller of national currency. The partnership between the state and bankers was sealed, creating a new form of authority, one that could fund wars, stabilize economies, and manipulate entire nations through monetary policy. Paper money soon replaced gold entirely. What began as convenience evolved into fiat currency, money with value because governments said so, not because it represented anything tangible. It was a quiet revolution. The world had moved from wealth you could hold to wealth you could only believe in. Today, we live in the latest chapter of that story. Banking has left the temples, the markets, and the gold vaults. It now lives inside screens, servers, and algorithms. The internet has turned banks into data processors. Transactions occur in milliseconds. Digital platforms handle trillions daily, while fintech startups challenge centuries-old institutions with innovation and speed. The rise of online banking, mobile payments, and digital lending has made finance accessible, but also more fragile. Power has shifted from vaults to code. And now, a new challenger has emerged: cryptocurrency. Built on blockchain technology, it claims to offer freedom from centralized control. Bitcoin, Ethereum, and others promise transparency and decentralization, ideals that echo the earliest dreams of financial fairness. But is it liberation or simply evolution? Every innovation in money's history has begun with freedom and ended with control. Governments are already exploring their countermeasure: central bank digital currencies, CBDCs, programmable money that can track every transaction, every purchase, every life decision. The digital age has redefined trust, not as belief in institutions, but belief in systems of code and cryptography. And yet, beneath all the innovation, the ancient truth remains. Money still runs on promises, not metal. The more technology changes, the more the foundation stays the same. From Mesopotamian temples to Roman markets, from Florentine vaults to blockchain networks, the history of banking is not just about wealth. It's about power, memory, and belief. Every generation rebuilds the same illusion, that money is real. But money, at its core, is faith. Faith in institutions, faith in systems, faith in each other. The invisible hand that began in Mesopotamia still guides the global economy today. It doesn't rest in vaults or currencies, but in the shared trust that makes those things matter. And that's the secret origin of modern banking. A system born from clay and faith, evolving through law and empire, now pulsing through code and data. The system has changed its face 1,000 times, but its heart has never changed. If this story changed the way you see money, don't let it end here. Share your thoughts below. Do you believe the banking system was designed or evolved by accident? Your insight might reveal more than you think. And if you seek the hidden patterns behind every financial empire, subscribe to the Fiscal Archivist and stay curious.